I don't know about you, but I'm a huge football fan. And I can hear you asking, what football has to do with a financial podcast? To that, I would say, everything. FIFA World Cup 2026 kicks off tonight. And whether you care about football or not, it's going to move the markets. It's going to shift consumer spending and it's going to create winners and losers outside of the match field. So, to that, we pay attention. This is Janelle Softy, and you're watching the Primexar podcast. Let's start with the headline number. FIFA, along with the World Trade Organization, said that this tournament is going to generate $40 billion in global GDP. As we all know, global GDP stands for Gross Domestic Product. And when the gross domestic product or GDP goes up, that means the economy is growing. So $40 billion in global GDP, that's incredible, right? Goldman Sachs, and for those of you who don't know what Goldman Sachs is, this is one of the most powerful investment banks in the world. When they publish a research note, believe me, the markets listen. This week, Goldman Sachs looked at the FIFA's $40 billion number, and then they looked at every single World Cup since 1982. And their final conclusion was the actual impact on national economies is going to be effectively zero. S&P Global, another major financial institution, said the same thing. Local boost? Absolutely. But moving national economic needle? Barely. So, how can an event that generates $40 billion have effectively zero impact? Well, this is the most interesting question in today's episode, and the answer is going to tell you everything about how economies actually work. So, stay with me. Here's the simple explanation. Those $40 billion did not come out of nowhere. This money was already going to be spent just somewhere else. Think of the fan who's flying to New York to watch a match. This fan could have spent this money on a different vacation or a different country. So the total spending in the economy does not necessarily goes up. It simply just moves. Think of it like this. Imagine that you have a concert in your city, a huge one. So the restaurants near the venue, they are packed. Hotels fully booked. Parking gone. The person sitting in that restaurant and eating, they did not just make new money. They are simply spending this money in that place instead of somewhere else. That's it. So the idea is the national economy barely noticed. This is what Goldman Sachs is saying about the World Cup. The money is real, the impact is real, but on the national level, the US, Canada, and Mexico are such large economies that a 39 sport event, they will barely feel it. Now, while the big picture looks complicated, some specific industries are expected to make enormous amount of money during this tournament, and Goldman Sachs named them. First, hotels. Revenue is expected to rise between 7 and 25% in host cities on match days. Think about Marriott, Hyatt, Hilton, all the direct beneficiaries. And Airbnb, that is an official FIFA partner, is alone expecting 380,000 guests during the tournament through its platform. Second, airlines. We have 13 million visitors, 104 matches, and 16 hosting cities. Someone has to fly all these people around, right? And for that, we have the American Airlines as an official sponsor for the World Cup this year. Their name is literally on the FIFA aircraft right now. Third, sportswear brands. Adidas has been named as the official matchball partner. Nike and Puma have major teams wearing their kit. So Goldman Sachs named all three stocks as worth watching while heading into the tournament. Think about every jersey, every boot, every kit that's going to be sold. For 39 days, the world is going to be watching football while looking at these specific brands. And finally, number 4 is beer. That's all I'm going to say about it. So what to do with all of this? If you trade stocks, the World Cup just gave you a roadmap. All the industries that I just mentioned, hotels, airlines, and sportswear, they are already moving in anticipation. And Adidas in particular is worth watching because it's an official tournament partner and it has global visibility for the next 39 days. And for forex traders, studies show that when a country's team wins a major match, the consumer confidence kicks up. They feel good, they want to buy more, the retail numbers improve. And the exact opposite happens when a country's team gets knocked out early. And for dollars specifically, with 11 out of 16 hosting cities, the American consumer spending is going to be higher for the next month. It's a dollar positive story for a short term, so watch it. But wait, does this affect the oil at any chance? Well, we have 13 million people flying internationally to watch these matches. And international flights means jet fuel. Jet fuel comes from oil. Jet fuel prices this year are already 70% higher than last year. Because, of course, the situation with the Strait of Hormuz that we've been covering for the last 3 months. And now, the World Cup is about to send the demand up by an estimated 30%. Higher jet fuel demand, that means an upward pressure on the oil prices that are already high. So yes, the World Cup affects oil prices, football affects oil prices, everything is connected. I've been covering wars, central banks, trade disputes, and oil prices for the last few months on this podcast. Today, I got to talk about football, and that's exactly the point of the Primexar podcast, because everything happens around the world has a financial angle. A sports event with 5 billion people watching is not separate from the economy. It is the economy for the next 39 days. That's it for today, everyone. The World Cup kicks off in a few hours, and I will be watching for professional purposes, of course. This was Jana Safti, and you were watching the Primexar podcast. May the best team wins. See you on the next one.